In 1935, the most decorated general in American history, Smedley Butler, stood before a room of stunned listeners and confessed to a crime. He didn't confess to treason, or espionage, or cowardice. He confessed to being a gangster for capitalism. He realized that for 33 years, on 3 different continents, his military orders hadn't come from a desire for democracy or freedom. They were essentially collection notices sent by banks and oil companies. We like to think wars are fought over borders, ideologies, or moral red lines. But if you open the ledgers instead of the history books, you see a terrifying contradiction. The most destructive wars in human history were also the most profitable business ventures ever created. This is the documentary dollar. We investigate the hidden architecture of the global economy to show you how money actually works. And today, we are auditing the business of war. The standard narrative of war goes like this. Diplomacy fails, tensions rise, and a country is forced to fight to protect its sovereignty or its people. It is painted as a tragic necessity, a failure of politics. But if war is a failure, why does it happen with such rhythmic, predictable precision? And more importantly, why do nations frequently enter conflicts that they seemingly cannot win, or stay in conflicts long after the objectives are lost? If you look at war purely as a political tool, it often looks irrational. Why did the European powers destroy their own empires in World War I? Why spend trillions in the Middle East for 2 decades only to leave the Taliban in charge? From a geopolitical standpoint, these look like blunders. But from an economic standpoint, they are perfectly rational transactions. This is the core mystery we need to solve. We assume the goal of war is victory. But what if victory is just a secondary option? What if the primary goal isn't to win, but to spend? There is a historical echo here that we can't ignore. In the 18th century, European monarchs didn't just fight to gain territory. They fought to justify taxation. War was the only state-sanctioned reason to demand the gold from the peasants' pockets. If peace broke out, the flow of revenue stopped. The mechanism was simple. Create a crisis, demand revenue to solve it, and use the revenue to secure power. Today, the mechanism is vastly more complex, involving sovereign debt markets, currency dominance, and industrial supply chains. But the incentive remains exactly the same. We are looking at a system where peace is actually a financial risk for certain sectors of the economy. To understand why the tanks are rolling, you have to stop listening to the generals and start watching the bond market. Let's strip away the flags and the rhetoric and look at the machinery. The modern war economy relies on a 3-part engine: the debt, the defense, and the dollar. First, let's talk about debt. War is the most effective way to create money. Under our current fiat system, money is created when debt is issued. When a government decides to go to war, it doesn't check its bank account to see if it has the cash. It issues bonds. It borrows against the future productivity of its citizens. This massive injection of new money acts as an incredible stimulus. In the short term, war creates jobs. It builds factories. It employs scientists. For the banking sector, war is a harvest. A government borrowing to fight a war is the safest debtor in the world because it has the power to tax its citizens to pay back the interest. During the Napoleonic Wars, the Rothschild banking family didn't care who won. They cared that both sides needed to borrow gold to keep fighting. The longer the war, the more debt accrued, and the more power the creditors gained over the nations. Here is where it gets strange. In a normal economy, if you build a car, that car sits in the market for 10 or 20 years. It satisfies demand. But in a war economy, you build a missile, and it is designed to destroy itself. It explodes. The product vanishes. This is the economic genius of war. It is the only industry where the product is consumed immediately upon use, creating an infinite, insatiable loop of demand. You don't sell a customer a missile once. You sell them the need to replace it every single day. This brings us to the second part of the engine. The industrial base. We've all heard of the military-industrial complex, but we rarely appreciate its specific economic necessity. High-tech economies require specialized manufacturing to stay afloat. If an aerospace company stops building jets, the assembly lines shut down, the specialized engineers are laid off, and the institutional knowledge rots. You cannot simply pause a defense industry. It is use it or lose it. To keep this industrial capacity alive, governments need a reason to buy the inventory. Peace is bad for inventory turnover. Low-intensity conflict, not total war, but constant, simmering conflict, is the ideal state for this industry. It burns off just enough inventory to justify next year's budget, without risking the collapse of the state. And finally, the third and most critical part of the mechanism, the currency defense. Since 1971, the global financial system has been anchored by the US dollar. The demand for the dollar is what allows the United States to run massive deficits without its economy collapsing. But what creates demand for a piece of paper? Oil. For decades, the unwritten rule was that energy is traded in dollars. If you want to buy oil, you need dollars. If you want to sell oil, you accept dollars. This system, often called the petrodollar, effectively backed the US currency with the world's need for energy. But this creates a dangerous incentive. If a nation decides to sell its oil in euros, or gold, or yuan, it isn't just making a trade decision. It is attacking the valuation of the US dollar. It is threatening the standard of living of the American population. When you look at the timeline of interventions in the Middle East and North Africa over the last 30 years, you will find a suspicious correlation. It rarely aligns perfectly with terrorism. It aligns almost perfectly with leaders who threaten to sell their resources in a currency other than the dollar. The mechanism is clear. The military isn't just protecting borders, it is protecting the currency's monopoly. The aircraft carrier is, in effect, a central banking tool. This brings us to right now. If the historical system was about protecting the petrodollar, the current moment is about something even more volatile: the transition to the green economy and the rise of a multipolar financial system. We are currently witnessing a massive geopolitical shift. The world is moving away from fossil fuels toward electrification. This sounds like a peaceful transition, but economically, it is a violent reshuffling of the deck. The old system required oil. The new system requires lithium, cobalt, copper, and nickel. We are seeing a new map of conflict being drawn, overlaying perfectly with the world's deposits of rare earth minerals. This is the new gold rush, but it's happening in a world where the US dollar is losing its absolute dominance. Nations like China and Russia are actively building alternative payment systems to bypass the Western financial network. This is the modern trigger. The war on terror is quietly transitioning into the war for the supply chain. Look at the recent trade restrictions and sanctions. They are the opening salvos of modern warfare. In the past, you would blockade a port with ships. Today, you blockade a country by cutting them off from the SWIFT banking system or banning the export of high-end semiconductors. But when economic sanctions fail to force submission, kinetic war usually follows. We are seeing the incentives align for a major conflict because the global debt burden has reached a mathematical breaking point. History shows that when debt-to-GDP ratios get too high, nations have two choices: default, which destroys the economy, or inflate the currency away, usually through war spending. The trigger today isn't a single assassination or a border dispute. It is the desperate need for Western economies to secure the physical materials for the next technological age, AI and green energy, while simultaneously finding a way to wash away a mountain of sovereign debt that can never be paid back in peacetime dollars. So, what happens next? If we follow the incentives, we can predict the consequences. We don't need a crystal ball. We just need a calculator. First, the institutional shift, the return of the arsenal of democracy. You are going to see a massive reindustrialization of the West, fueled by defense spending. Governments will frame this as job creation and patriotic manufacturing. We will see the blurring of lines between private tech companies and the Pentagon. Silicon Valley and the Defense Department will effectively merge. Your social media platforms and your missile guidance systems will come from the same conglomerate ecosystem. The narrative will shift from globalization to strategic autonomy. Second, the government strategy: financial repression. To pay for this new war economy, governments will not raise your taxes directly. That is too unpopular. Instead, they will use inflation. By printing money to fund defense and supply chain security, they will devalue your savings. You will hear leaders talk about the price of freedom, or shared sacrifice. What this means in practice is a lower standard of living for the middle class. The government will cap interest rates to keep their own borrowing costs low, meaning your savings account will earn nothing while inflation eats away at your purchasing power. This is a transfer of wealth from savers to the state. Third, the human cost, the normalization of anxiety. For the ordinary person, this transition will feel like a permanent state of emergency. The news cycle will move from one crisis to the next: a pandemic, a supply shortage, a regional war, a cyber attack. This isn't accidental. A population in fear is a population that accepts protection. We will move away from the expectation of peace and prosperity and toward a mindset of survival and resilience. You will see a cultural shift where stability is valued over liberty. This sounds bleak, but it is not the end of the world. It is a transition. Empires and economic systems have life cycles. We are simply in the late autumn of the current cycle. The danger lies in believing that the old world is coming back. It isn't. Here is the single deeper truth that reframes everything we have discussed. We grow up believing that peace is the default state of humanity, and war is an interruption. But the economic incentives suggest the opposite. In a debt-based monetary system, stability is actually unstable. When things are peaceful and stable for too long, debt accumulates, inequality widens, and monopolies stagnate the market. The system naturally clogs up. War, economically speaking, is a reset. It destroys excess capital, it wipes out old debts, often by destroying the creditor or inflating the currency, and it clears the board for a new game. The shocking realization is that the global economy, as currently structured, requires periodic destruction to maintain growth. We don't go to war to solve problems. We go to war to solve our balance sheets. The reason we can't stop the wars is that our money itself is weaponized. As long as our currency is backed by debt, and that debt is backed by the threat of force, we will never truly be at peace. We are merely between transactions. The moment you understand that war is not a political failure, but a financial feature, the headlines stop looking like chaos and start looking like a business plan. The question then becomes, if the dollar requires this machinery to survive, what happens when the world stops trusting the dollar? That is the thread that unravels the whole sweater. If you want to understand how the control of currency dictates the fate of empires, you need to watch this video on the history of the Federal Reserve next. It explains the origin of the money that fuels the fire. Click here, and I'll see you there.